on the 7th of April, we had looked at a couple of topics, right? We had looked at risk of material misstatement. We had looked at what is a misstatement. We had looked at various topics on the 7th of April, which is about 2 days back. Today, we're going to continue on with audit risk, and we're going to look at the 6th chapter, which is on planning. Okay, so basically, we're going to complete audit risk. So today's date is 9th of April. And guys, we need to kind of increase our speed a bit because there are, remember, 15 chapters in your syllabus. And we're still in the 5th chapter. Right, so we need to rush up. We need to increase our speed. So today, my speed will be comparatively faster compared to normal. Today, my speed will be a little faster. Okay, so what we're going to look at today is on, again, in the last class, we had seen all this materiality, analytical procedures, I'll come back to. But we had seen what is audit risk. And I had also given you a tip on how to recognize something as an audit risk and what will not be an audit risk. Today, we're going to look at audit response. What do you mean by audit response? Guys, excuse me. Am I audible to everybody? Can you all hear me? Yes. So, what is audit response? Now, when I say audit response, what I mean is, it's like once auditor auditors find risks, correct? And then they must take specific actions to check for that risk properly. Right? So, again, I'll give you an analogy to explain this. But it's like this. It's like, say you go to a doctor. So when you go to a doctor, and you say, I have pain in my leg. So the auditor knows that the doctor knows that there is risk. Oh, there is leg pain, could be something more serious. Correct? So will the doctor simply say, oh, okay, there is a risk, but let's just ignore it? That does not happen, right? The doctor might say, in order to respond, I will give you an X-ray. Right? So there is something that you will do. There is certain way you will respond in order to solve that problem. Imagine you go and say, I have leg pain. And the doctor says, please drink enough water. I mean, I don't think that this is the right response to leg pain. Right? I mean, okay, I will drink water, but what is the solution to the pain? You will probably check it. What is the reason for my pain? There has to be some response, right? Or the doctor says, okay, you have leg pain. Let me just measure your height and weight. Again, this is not the right response. Or say, if you go with leg pain, doctor says, okay, you start jumping. Will you be happy? Will you go to that doctor again? No, you will not. Because he wants to probably, with leg pain, if he's asking you to jump, maybe he wants you to break your legs or something. Right? So remember that when the doctor kind of speaks to you, he assesses the risk and he responds to that risk in a certain way. And the same thing the auditor is also expected to do. And that is what you people are expected to know. For example, customers are not paying us what they are supposed to. For example, the customer has bought a pen from me, but he hasn't paid it. So again, remember, if the customers are struggling to pay, we did this day before yesterday. But if the customers are struggling to pay, what is the audit risk, guys? Who can tell me what would be the right customer is struggling to pay? What would be the audit risk? Go back to the last class. I gave you a tip. Ask yourself one question. How is the problem stopping the financial statements or potentially stopping the financial statements from being true and fair? Suppose customers are struggling to pay. I'm giving you an example. Oh, the business lose money. Is this an audit risk? Oh, very good, Ashwin. Definitely not. This is not an audit risk. I mean, why do I care about the business? The audit risk will be if the customers are struggling to pay, there is a danger that, say, Prakash has to give me 10 rupees. So in my receivables, I will write what? 10 rupees, correct? But if Prakash is struggling to pay, then this 10 rupee receivable may be misleading, because maybe if Prakash can't pay, then I don't have a receivable of 10. You understand? So this is what was done in the last class about what would be an audit risk. So here, if customers are struggling to pay, the audit risk is what? The audit risk is that receivables could be overstated. Again, this is a quick revision from last class. If customers are struggling to pay, receivables could be overstated. So there is a risk. So there's a problem and there is a risk. Now, as an auditor, once you have identified a risk, it is your job to respond to the risk and say what should the company do in this case. You understand? So how will you respond to the risk is what we are going to learn here. And this is something that is very, very important, because this is something that is many people, they don't do it well. They don't understand it well. So make sure that before we go ahead, before we continue, you are clear with what? You are clear with What is the issue and what is the risk? I'm pausing the recording for just a minute for everybody to see if you're clear to audit risk, which is actually technically the first thing for the class today. Okay. And I will explain this to you with the help of steps. The first step to give an audit response is to see what is the risk in the first place. What is the exact problem? What is the risk? Right? In this case, if customers are struggling to pay debts, the risk is that the receivables will be overstated. So the first thing you need to do is know what is the risk. The risk is receivables will be overstated. Receivables will be overstated. That is the risk. So the first step, remember, in order to give an audit response to a risk, in order to give a response, you need to know what is the risk in the first place. Once that is clear, you need to know, or you need to kind of look at what evidence would directly prove it or disprove it. What do I mean by this? We said the risk is that the receivables will be overstated. What should I check to give me an answer to that problem? For example, if I tell you that the risk is that your door is open, your house door is open when you are leaving, what evidence do you need now? You need to go to your door and try to open it, correct? Forget double A. If I tell you that there's a risk that your house door is open, that is the risk. Now, when I tell you that there's this risk, what will you do? You will look for evidence. What evidence do you need either to prove that your house is open or prove that your house is not open? So what will you do in this case? You will go to get evidence. You will go and try to open the door. This is proof. Either it will prove that the house is open or it will disprove it. So if when you try to open the house, if the house opens, then this is proved. What I was saying, risk I was saying is proof. But when you try to open and the house is locked, then what I was saying as a risk is disproved. So this is what any human being, any normal person will do. When there is a risk, they will try to get evidence, prove it or disprove it. Right? For example, going back to my example, when I said that Prakash has to pay me 10 rupees, the risk is Prakash is struggling to pay and receivables will be overstated. Right? Now, what do I have to do? I need to check if at the year end, the customer actually paid it. You understand? I need to check, I need to inspect after date cash receipts from customers to see if paid post year end, proving the debt is appropriately valued. So I need to check, okay, Prakash was paying, he has paid so much, he has paid 2 rupees at the end of the year. So now he has to pay me 8 rupees. So I can check what did Prakash actually pay to kind of confirm whether my receivable is correct or not. And that's why we're saying check what Prakash was owing and now how much did we pay to confirm whether the receivable of 10 is correct or not. So you will need to gather evidence. check, inspect after date cash receipts from customers. Remember, I told you when we started, I said, as an auditor, you are an inspector. Inspect after date cash receipts from customers to see if paid at your end. Now I'll tell you how to give a good response. Don't worry, because that's the, oh, that's not here. But don't worry, I will explain to you how to give a good response. So you need to look at what will prove it or what will disprove it. So number one, spot the exact risk. Number two, think of the test that proves it or disproves it. Number three, avoid, especially from an exam point of view, avoid general answers. Understand? Don't give a general answer. Don't say, we will call the customers and ask if they bought from the shop, because that's a general thing just to see if they are a receivable. It doesn't check if they, it doesn't really check if the receivables are overstated. So avoid giving general answers. This is a general answer. Right? I will give you one example. Look at this. One risk is revenue is falling due to recession. The cash flow forecast shows negative flows for the next 12 months. So that is a problem. And we need to give an audit response. We need to respond to the risk. So number one, what is the risk in this case? What is the exact problem? From an auditor's point of view, what is the problem? And I told you in the last class how to deal with these risks. If revenues are falling, some people will say, oh, business will go down. Oh, profit will not be there. Oh, manager will die. Oh, I mean, remember, as an auditor, for you, I gave you a tip in the last class. You need to worry only about how is the problem stopping the financial statements from being true and fair. If revenues are dropping, if revenues are going down, there is a danger that we will not be able to continue running the company because revenues are going down. Again, that is not the risk. The risk is in the financial statements, we have not properly disclosed the problems. Again, I don't want to get into those details because that was done in the previous recording and in the previous class. The audit risk, again, whoever wants to know how to spot the audit risk should definitely watch the previous recording. But in this case, when revenue is falling, the audit risk is not that the company will shut down. The audit risk is the financial statements may not fully disclose going concern issues. I repeat again, those of you who haven't watched the previous recording should 200% watch it because it's very important. Right? When the revenue is falling, the danger, the problem is not that the company will shut down, not that the director will commit suicide, not that the profits will go down. No, the risk is that this fact that revenues are going down may not be properly disclosed in the financial statements. And as an auditor, we need to ensure that all disclosures are correctly made. So remember, in order to give a risk response, first thing you need to know is what is the risk. The risk is the audit risk is that the financial statements may not fully disclose going concern issues. What did I say the next step is? Yes. What did I say the next step? I can't hear. Yes, Arjun. Yes. So the second thing we need to look at is, again, the danger is that the going concern issues may not be properly mentioned. Right? Now see, again, we need to look at how do you respond to the risk. What evidence? See, we said that there is a risk, there is a danger that the going concern issues may not be fully disclosed. So we need to check evidence or disprove it. How will you do that? And what evidence will directly prove? What evidence do we need? Let's keep it simple. What evidence do we need to check this? We need to see, how will I know if going concern issues are disclosed or not? How will I confirm if there are going concern issues or not? Because the risk is what? That because the revenue is falling, the risk is there could be going concern issues that may not be disclosed. So the audit risk is that the financial statements may not fully disclose going concern issues, if any. So what evidence do you need? You need to check if there are going concern issues. So you need to assess the company's ability to continue in business. And that is what is continue in going concern means. Continue as going concern means continue to operate. So the second thing you will do is you need evidence. So what will you do? You will assess the company's ability to continue in business. By checking the forecasts made by the company or the management. So the management must have made some forecasts. They may have made, okay, January we will have so much money, February we will have so much money, March we will have so much money. So the client would have made certain forecasts. So as the auditor, your fear is that there may be going concern issues that may not be fully disclosed. So you will check if going concern issues are there. Right? So you will have to see, you will have to assess the company's ability to continue.
It's 6 o'clock.
By checking or inspecting the forecasts made by the management. And see how reasonable the assumptions are while making forecasts. For example, again, okay, I'll come back to this later. But what does this say? How will you get evidence? How will you prove or disprove? You will check. Okay, are they going concern? What forecasts have they made? They have money coming in. Can they sustain for the next 1 year? So that's the second thing you will do. Based on that, you will know whether the company is going concern or not. And in this case also, you will have to avoid general responses that you will give. You cannot give very generic responses. You will not give generic responses in this case also. For example, perform an analysis of past performance and assess the profitability of the company. Right? Again, checking past performance does not explain anything about ability to continue in the future. So this is not a good response. Maybe in the past you were a king, but going concern is worried about whether you can continue to be a king in the future. Yes, we can. So analyzing past performance does not provide sufficient appropriate evidence that we can continue in the future. Right? Yes, calculating liquidity ratios will help you, but you need to further do some procedures in order to confirm it. So don't give general responses. You will have to give specific responses. Okay, once that is over, again, relate the response directly to the problem, to the risk. Okay, we will look at one more example to understand this. And we're talking about the client operating in a fast-paced industry, like, for example, FMCG, fast-moving commodities and goods. Say we're talking about food. Food generally goes spoiled fast. The client operates in a fast-paced industry. Again, what is the audit risk? See, some people say, oh, if we are dealing with food, the danger is that the food will get spoiled, we will waste money, and profits will go down. I explained in the last class that this will be the wrong answer, because remember, in order to identify what is the audit risk, you need to ask yourself only one question. How is this problem possibly causing a mistake in the financial statements? Whether you will lose money, whether your profits will go down, whether the food will be spoiled, I don't care. This is the wrong answer. You need to ask yourself only one question to get the audit. How is this problem potentially causing the financial statements to be misstated? Again, if the food is getting wasted, that is not leading to a problem in the financial statements. The problem in the financial statements is if the food is getting spoiled. When I have food, I will say, okay, I have inventory worth 10. But I don't care if the food is getting spoiled. Yes, very good. I am only worried that if the food is getting spoiled, I need to correctly show it in the financial statements and say, out of 10 rupees worth of food, 2 rupees worth of food is spoiled. So only 8 rupees of worth of food we have. But if I don't correctly reflect that, you see the problem? If I still show that the food is worth 10, then the inventory is overstated. And that is the problem the auditor has. So whenever you are asked to identify the audit risk, your only question is, how is this problem probably potentially causing a mistake in the financial statements? Your job is not to worry about the food being damaged. Your job is not to worry about how disappointed the chef will be. Your job is not to worry about the customer raising a complaint. Your job is only to worry about how will that cause a problem in the financial statements. Right? So the risk is that the inventory. So again, what is the risk? The inventory will be overstated. Number one. How will you respond? What do you do? Some people will say, again, what evidence do you need for this? Some people will say, count the inventory. Remember, counting the inventory is a very general answer that does not directly get evidence whether the inventory is damaged or not. Counting the inventory, okay, fine. This is one bottle or box of curd, another bottle or box of curd, third bottle or box of curd, fourth bottle curd. Counting will only say that it is there. It will not assess whether the inventory is obsolete. It will not assess whether the inventory is damaged. Then one of my students said we have to taste the curd and tell it's damaged. And everybody laughed. But he was not wrong. Okay. We will need to check whether we need to see if there is signs of damage. So counting the inventory only confirms if inventory is there. It doesn't confirm that the inventory is damaged. So counting the inventory and putting it in black, black means it's burnt. Burnt means it's not the right answer. You are burnt. Very good, Vinith. You need to review the inventory and see how much of it is damaged. And whatever is damaged need to be written down as damaged in the financial. It needs to be corrected in financial statements. So, very good, Vinith. That's absolutely right. What is the best thing you will do? You will first have to check. As of now, I have $4 or 4 bottles of curd, but the first bottle is damaged. So first thing I will do is check, review. Second is okay, third is okay, fourth is okay. So what will I do as the auditor? I will need to write down the damaged inventory. I need to say, okay, out of 4, only 3 is there. This would be the right response. So again, people feel this is a lot of theory, but this is not theory. In fact, once you become the auditor, this is the most practical thing you will do. It's an exercise. So please don't sit in this class like you are in a theory class. It's an exercise. What will you do? You will look at the list of the inventory, review the inventory, and discuss with management the need for it to be written down in the financial statements. Because otherwise, the inventory will be overstated. So you need to ensure that you check the inventory, and write down the obsolete, write down the damaged inventory in the FS. FS is financial statement. So this will be the right response.
Sir, can you repeat again?
Which part, Ritika?
So now I will join. What are you taughting in the class? Can you repeat?
Sorry.
Which chapter is going on, sir?
Okay, so see, Ritika, this is the same fifth chapter. We're looking at audit response, how to respond to audit risk. It's a continuation of the previous chapter, yesterday's chapter that we looked at, right? And please ensure that you join on time. Obviously, now if I repeat the same thing, there are 7 other people who may not want that. So I'll give another example. You listen to that, and for this example, pause the record. Here, what is happening is check the inventory, write down the damaged inventory in the financial statements. Some people will say, tell the company to give discounts to customers so that all curd bottles, I don't know, curd bottles, but all curd boxes, even boxes is the wrong word, but tell the company to give discount to customers so that all curd boxes are sold before being damaged. Now remember, this is not the auditor's concern. So I'm putting this also in black. You are not their business consultant to give them business ideas. You are not their business consultant. This is how to sell fast, how to sell before the inventory is damaged. Some people say, keep the, I've literally seen these kind of answers. That's why I'm telling you. Keep the inventory in a safe place so that it is not damaged. Why are you keeping it? Does the client not have people to keep it in the fridge? You are learning to keep curd in the fridge. Please, this is the worry and the headache of business, not your worry. Don't go and say in the exam that if the inventory is damaged, we need to safeguard the inventory. The business knows that. The client knows that. Your job is only to check, is it damaged and is it correctly reflecting in the financial statements. That's it. So whatever I've put in black will make you lose marks. Please don't say that in the exam. Your job is first to identify what this is and to give a suitable response to it to ensure that the financial statements are true and fair. That's all. I get such funny answers when I keep class tests also. I get such hilarious answers. Right? I get answers like, check the expiry date before buying. Right? So don't give an answer like that. How will you respond to that? You will check if the inventory is damaged, and if it's really damaged, you have to ask the vendor to write it off. You have to say, this is damaged. Just putting my device on charge. Yes. Guys, am I audible to everybody now?
Yes, sir.
Can you all hear?
Yes, sir. Sir, it is a chapter of audit risk chapter.
This is chapter 5, the one which I was doing day before yesterday. The ones who can hear me properly, please type and tell me that you can hear.
Yes, sir. Your voice is
Very good. Others? You can hear me? Whoever can hear me, just say yes, yes, yes. Very good. Okay, so if there is any problem, just kind of, I don't know, if it's only one person, then it will have to be from your end. As I was just checking. Okay, so again, what is the next? Again, guys, I am forced to give many examples because this is not theory. I hate it when people say, oh, audit and assurance is a theory paper. It's not. There's a lot to do. See, you are checking the inventory, you are writing it down. It's all practical. In fact, I would have been happy to actually do it practically in front of you. Okay, for example, when we looked at code of ethics, that was theory. Okay, confidentiality is needed, integrity is needed, activity is needed, theory. But this is not theory. This is real life activities that you will do as an auditor. I hope this is clear. I hope this is easy. Now, again, before I move on, so now if you want, Ritika, you listen very carefully. How do you respond to risks and how do you identify risk? Remember in the last class, I told you what risks are. I told you all the types of risk, everything I told you. Inherent risk, control risk, detection risk, right?
Yes.
Once, what are the steps that you will do? First is to identify what is the audit risk. Right? Remember, going back, please don't hate me for this. I'm going back and doing the same thing on audit risk because it's very important. People don't understand it. First thing you do is whenever there's a problem, for example, customers are struggling to pay. Okay, when I say customers are struggling to pay, students give me wrong answers. What is the risk? They give me all the wrong answers. You know, on social media, they post a picture and they say wrong answers only. Where am I? Wrong answers only. Right? So what is customers are struggling to pay? Wrong answers. What will be the wrong answers? The wrong answers will be, again, number one, if customers are struggling to pay, oh, business will close. That is not the auditor's worry. We will not be able to collect all receivables. That is also not my worry. We will lose money. That is also not the auditor's concern. The auditor's concern. So you will ask me, okay, sir, in that case, what is the concern? What is the auditor's worry? The auditor will only see कि ये जो problem है, this problem, how is it affecting my financial statements? That's it. Don't say answers like, oh, the management will be in worry. You just have to see ये problem, this problem, financial statements को कैसे negatively affect करेगी. ये problem, how will this problem negatively impact statements? That is the only thing you will look at. So customers struggling to pay the bills, what will be the problem? The problem will be receivables may be overstated. For example, Manan has to give me some money, Ritika has to give me money, Ashmeet has to give me money, Rajesh has to give me money. But suppose Rajesh is struggling. So I have to remove money or receivable from Rajesh here. Otherwise, receivable is overstated. And that is my only worry. Because I'm telling this multiple times because people actually say things like management will be worried. Go and do their counseling then. That is not your job. So in order to identify audit risk, what will you do? Your only question is, ये जो problem है, this problem, how will it cause a mistake in the financial statement? That's it. ये problem financial statements में कैसे problem create करेगी? That's it. Nothing else. Okay. So the right answer will be, what is the audit risk? The audit risk is receivables will be overstated. If bad debts are not written off, yes. If bad debts are not written off, receivables will be overstated. So what will be the auditor's response? Auditor will not say, okay, give them more time. People give, I've seen answers. They say, oh, if they're not able to pay, give them some discount. No. What is the problem for the auditor? The problem is receivables will be overstated if bad debts are not written off. So the response will be, we need to check who paid and who didn't pay. And whoever is unable to pay, we need to write it off. Yes, Ritika?
सर ऑडिट रिस्क में हम लोग ये भी तो बोल सकते हैं कि मतलब उसका मतलब मार्केट में तो मतलब माल इतना सेल नहीं हो रहा, उसके लिए उसके पास पैसा नहीं है जो पूरा पेमेंट करे।
Can you type this? I can't hear you.
क्या सर?
Can you type this? I cannot hear you.
सर नाउ इट्स ऑडिबल।
Yeah, tell me.
सर बोलो उसका मतलब मार्केट कंडीशन नहीं होगा, सेल और परचेज नहीं हुआ होगा, कंपटीशन बढ़ गया होगा, इसलिए उसके पास मनी नहीं है जो पे करे।
Please type it. I really cannot understand.
सर इतना ऑडिबल नहीं हो रहे अभी हम बोल रहे हैं तो सर।
No, I can't understand what you're
हेलो
saying. Just type it.
सर, हम बोल रहे हैं मतलब उसका मार्केट कंडीशन अच्छा नहीं होगा, उसके पास पैसा नहीं होगा इसलिए वो पेमेंट नहीं कर पा रहा है।
Okay, so
उसलिए बोले वही आंसर नहीं लिख सकते क्या ऑडिट रिस्क में?
a customer cannot pay because he is not having money.
यस सर, ये इसमें ये क्वेश्चन में नहीं लिख सकते हम लोग क्योंकि उसके पास
Audit.
एक्सेस मनी नहीं है, क्योंकि उसके पास सेलिंग नहीं हुआ होगा मार्केट
हाँ, तो हम देंगे
कंपटीशन।
कैसे? If he doesn't have money, who will give that money? उसके
उसके
पास
लिए टाइम लग रहा होगा कि उसको
है,
पे करने के लिए, अभी
मेरा प्रॉब्लम
कैश नहीं
नहीं है.
होगा।
Listen, उसके पास पैसा है नहीं है, that is not my problem. My problem is financial statements. This.
सर मतलब ये जो ऑडिट रिस्क लिखना पड़ता है सर, वो हम लोग के पॉइंट से लिखेंगे या कस्टमर लोग अपने पॉइंट ऑफ व्यू से लिखेगा?
हम कौन है, कस्टमर के ऑडिटर?
हम कस्टमर है।
हम कस्टमर हैं या ऑडिटर? कौन सा पेपर कर रहे हैं?
क्या सर, आवाज नहीं आ रही, एक मिनट बोलिए। हेलो
हम कस्टमर हैं कि ऑडिटर?
सर, आपका साउंड ब्रेक हो रहा है।
Can you all hear me? रितिका, आप जब ये पेपर कर रहे हो, आप कस्टमर हो या ऑडिटर?
ऑडिटर है हम
तो कस्टमर के पॉइंट ऑफ व्यू से क्यों जवाब देंगे?
ऑडिटर के पॉइंट ऑफ व्यू से देंगे, ओके सर। और सर रिस्पॉन्स भी ऑडिटर पॉइंट ऑफ व्यू से देंगे।
Of course. रिस्पॉन्स भी ऑब्वियसली ऑडिटर के पॉइंट ऑफ व्यू से. ऑडिट रिस्क an
हाँ,
audit response है ना
ये क्वेश्चन का जब आंसर लिखे वो तो समझ नहीं आया, बताने से अच्छा है तो।
नहीं, पहले you have to be clear on what we are doing. We are looking at audit risk. I don't know ये डाउट आया ही कहाँ से, कस्टमर के पॉइंट ऑफ व्यू से क्यों लिखो कुछ भी. Guys, so far is everything clear? Everybody else? Or is there a
सर
confusion?
सर
One
आई
second,
हैव डाउट।
1 second. Guys, so far is everything clear with what is audit risk and what is audit response? Ritika, what is your doubt?
सर हमको ये समझ नहीं आया, ऑडिट रिस्क और रिस्पॉन्स में हम लोग क्या लिखना
So
है।
that's what
ऑडिटर पॉइंट ऑफ व्यू से लिखे ठीक है, पर क्या लिखना है वो समझ नहीं आया।
so that's what I told you. देखो, class starts at 5:30. मैंने जो starting का part करा, you were not there. So please make sure that you are here. ये जो recording है, watch it. Go back because this is something I've spent almost 1 hour on. If I repeat the same thing, there's a problem. So आप class के बाद ये जो class हुई अभी, watch it. And whatever
सर वो
doubt you have, message it in the number, our number.
सर वो तो समझिए, खैर आप ये बता दीजिए रिस्क और रिस्पॉन्स में क्या लिखेंगे ये क्वेश्चन का, कस्टमर
कौन सा
का।
कुछ
ये कस्टमर स्ट्रगलिंग टू पे द।
कस्टमर आर स्ट्रगलिंग, तो इसमें रिस्क क्या है?
हाँ तो वही बोल रहे, रिस्क और रिस्पॉन्स में क्या लिखेंगे वो समझा दीजिए, और हम रिकॉर्डिंग देख लेंगे।
Customer, if he is struggling to pay, receivable ज्यादा, he will, there is a chance that receivable is overstated. And if receivable is overstated, we have to correct it. How will you correct it? By checking the receivable, see if he has paid. If he has not paid, if they are not paid, we will write it off. That's it. Okay. So guys, this is audit response. Audit response looks at, one, you identify audit risk. What is the audit risk? How will you know if something is audit risk? See, how is that creating a problem in the financial statements? That's it. This is how you identify if something is audit risk or not. Inventory is going to be damaged. Customer operates in fast-paced industry. If customers operate in fast-paced industry, what is the risk? Again, wrong answers. Food is wasted. Manager is disappointed. Money is lost. Loss. Correct answer is, if customer operates in a fast-paced industry, if this happens, how will it negatively affect financial statements is the only thing you will ask. Customer in a fast-paced environment, there is a danger. Who can guess what is the answer? What is the danger for the auditors? Can anybody guess? Very good. Beneath others, the danger is the inventory. Again, that there is inventory that is damaged. Early financial statements. Inventory is that is the only danger for the auditor. The only worry of the auditor is inventory overstated. Okay. Now I'm going to give an exercise. You all have to guess what is the audit risk. Okay, I'm going to give you an example. You have to tell me what is the audit risk. Very good, Vineet. That is the response which you're telling me. But now, just for the sake of exercise, for the sake of exercise, I will give you some examples. Again, just thinking of an example. There is a legal case the client is facing. First risk is the client will have to spend money for the case. Do you think this is audit risk? Yes or no? Quickly, everybody. No, this is not audit risk. Why? Because that is the client's problem.
इट्स मतलब ये क्लाइंट का प्रॉब्लम है ना, ऑडिटर का तो प्रॉब्लम नहीं है ना, उसका केस चल रहा था.
Exactly. Next, the lawyer may not come on time and help us and help the client. Is this an audit risk? No. The company's time will be wasted. Is this an audit risk? Fourth is, we may not be disclosing potential liabilities in the financial
नो.
statement. Yes. This is a problem. Very good. Nashmana, Nashmeet, Anil, Arjun, Vineet. Yes. This is the audit risk. This is the danger for the audit. Why? Because case is there. But if we don't properly make a proper disclosure in the financial statements, then the financial statements may be misstated. Right? So that it will be the audit risk. So again, you will ask yourself only one question. Is it making any problem in the financial statements? Right? Can we look at some more examples to understand this?
Yes.
Let's look at some examples. we are having, guys, just give me one second. Yes. So we are having, say, a big loan. Actually gave this in my class. The risk is that the company may be finding it difficult to repay. Is a worry for the auditor. It's a risk the
That the
company will
company
find
may
hard
be
to repay.
finding.
Company
Sir, repeat the
finding it
question
difficult.
again.
I've typed the question, Ritika. The company may be finding it difficult to repay. Is this a problem? No, definitely not. This is the company problem. The managers may be stressed. Is this the auditor's
No.
worry? The
No.
company's problem. The shareholders may not want to put more investment because there's too much financial leverage. Okay, let me use simpler words. There is too much loan. So they don't want to put more money in the company because the company has a lot of loan in the company. Do you think this will be an auditor's risk?
No.
No. Then the fourth risk is the debt liability may not be, maybe understated. Is this a worry for the auditor? Very good, guys. Ashmeet, Puneet,
सर ये तो नो होगा.
who else? Arjun, Manan.
सर ये नो होगा. यस कैसे होगा सर? डेप्ट लायबिलिटी वाज ओवरस्टेटेड.
Right. So again, I have explained this, but remember, you have to only worry about what is the worry for the auditor. How, is there something that is going to make a mistake in the financial statements? If the debt liability is understated, do you want that, Ritika, in the financial statements, debt to be understated? If you get 80 marks, will you be happy if the examiner put 49 marks for you?
नो सर.
So same way, the auditor, if loan 80 rupees, there is loan, will you be happy if somebody says in the financial statements loan is 49 rupees? No, right?
Yes sir.
So obviously we don't want the debt liability to be understated. So that is the audit process. So that is, guys, audit risk and the response to the auditors, with which the fifth chapter is. Now remember one thing, all of these chapters that are coming shortly, I hate it when people say they are theory chapters. Yes, very good, Bait. Information that anyhow affects, anything that negatively affects your financial statements will be in it. All these chapters that we are going to do now, okay, I've done all of this, audit response, all of this, analytical procedures will come to, not now, very soon, shortly.
सर अभी कौन सा चैप्टर स्टार्ट करेंगे?
Sixth. Okay, we'll look at test your understanding one before doing, okay? Because again, I want you people to enjoy doing audit, checking the risks and so on. Look at test your understanding 1. Using the information provided, describe 6 audit risks and explain the auditor's response. So let's look at this. Let's look at the information. Your firm, Wimble & Co. has recently accepted the appointment as auditor of Mureco. So our client is Mureco. Having sold your shares, remember, read each of these things very carefully. So you have sold your shares in Mureco. You have been assigned as audit manager, because remember, section B, this is what will be asked. These type of questions will be asked. Identify the risk and give the response. So please don't take these questions lightly. Right? You have been assigned as audit manager and you have started planning the audit. You are an employee of Mureco. Okay. But yes, there is a threat, but that threat, I believe, is more to our objectivity and not to the financial statements as such. Audit risk is anything that affects the financial statements. And it clearly says this was many years ago and you do not have any involvement in preparing the financial statements. So remember, there is no, excuse me. Remember, there is no
financial statement.
There is no self-review threat. Why? Because you didn't prepare the financial statement. You have held a meeting with the client and have ascertained the following. Mureco manufactures sports equipment. So they make sports equipment. Okay. Most items of equipment, such as tennis rackets, hockey sticks, and balls, take less than 1 day to manufacture. Mureco's largest revenue generating product, ergometers, takes up to 1 week to manufacture. Okay. Fine. Mureco refurbished the assembly line for the ergometers during the year. And the company uses a third-party warehouse provider to store the manufactured ergometers, and basically kind of approximately 1/4 of the other equipment is stored there. Historically, Mureco has only sold to retailers. For the first time this year, Mureco has made sales directly to blah, blah, blah. Mureco is planning to list on the stock exchange next year. Using the information provided, identify 6 audit risks that we will need to look at. According to me, look, we said, again, we need to worry about how can any of this negatively have an effect on the financial statements. That's all. We're only worried, how will any of this have a negative impact on the financial statements? First things first. Well, from what I'm able to see, Mureco uses a third-party warehouse to store the inventory. So the inventory is in a third-party warehouse. Inventory. Think about it.
Sir,
If inventory,
so confidently thread.
sorry,
से थर्ड पार्टी तो उसे एथिक्स में आ गया ना.
sorry, what?
तो यहाँ थर्ड पार्टी वेयर हाउस लिखा हुआ है. हेलो.
Okay. Okay, go ahead, proceed.
तो सर ये एथिक्स के चैप्टर में था ना, ट्रेड में कॉन्फिडेंटली. फिर प्रिंसिपल था ना, कॉन्फिडेंटली प्रिंसिपल, तो उसमें तो थर्ड पार्टी आता है ना।
Correct. What is this?
So थोड़ा स्पीक लाउड।
Doubt? Guys, am I audible?
यस सर।
Okay. Inventory is a third party warehouse. Remember, if inventory is somebody
सर
else,
नेटवर्क इशू हो रहा है सर, आवाज नहीं आ रहा आपका।
will not. Can you all type? There is some problem with the. I'll just fix this. Give me a second. Now, am I audible? Inventory is in a third party warehouse. Okay. So when inventory is in a third party warehouse, there is a danger that you will not be able to,
स्पीक लाउड।
you will not have an idea about the condition of the inventory. And if you don't have an idea about the condition of the inventory, there is a danger about the fact that if you don't know the condition of the inventory, yes, very, there is a danger that inventory could be overstated. Maybe there is inventory that is damaged, but because we don't know about the condition of it, we are unaware. And because of that, the financial statements are misstated. So the danger is what? The risk is, what is the audit risk? The audit risk is inventory is stored in a third party warehouse. So you will not have an idea, or rather, it will be difficult to obtain evidence. Now, again, evidence we will look at shortly, but it will be difficult to obtain evidence about the quality and quantity of the inventory held. So, overall, there will be a danger that inventory is misstated. Okay, that is the danger, that is the risk, right? So again, first we will identify all the risks and then we will look at the responses. Okay, so this is the first risk that I have identified. The question is asked me to identify 6 risks. What is the second risk that I see? Retail customers are struggling to pay. Yes, very good. Who said that? Manan. Some of Mureco's retail customers are struggling to pay their outstanding balances. Several of the sales team were made redundant last month as a result of falling retailer sales. So many of them we have fired. Now, again, this one which I have marked that okay, customers are struggling to pay. I've already told that. And it was very good, Manan. You identified it, spotted it. Excellent. I appreciate that. Again, what is the risk? Retail customers are struggling to pay. So what is the risk? This is the problem. But what is the risk to the financial statements? The receivables may be overstated. We saw this. Right? That is the second risk. Very good, man. What is the third risk according to me? Several of the sales team were made redundant. Now, what does redundant mean? Redundant means we've removed them from the job. Several staff were fired. Now, I'm not joking, but I get these kind of answers in risk. I get answers like those staff will not have a job. Oh, so sad. You are the auditor, not their mother. You are not worried about whether they have a job or not. Please don't say that. But because several staff were fired, remember that when it comes to redundancies, certain disclosures are necessary. A redundancy provision will be required for any staff not yet paid. And again, you are firing them, so you might have to pay them some money. And if you don't mention that in the financial statements, liabilities will be understated. For example, I am firing Prakash and 10 other. We may need to pay them. And if this liability is not properly stated in the financial statements, the current liabilities may be overstated. That is the risk. Please don't say they will not have a job, they will suffer, they will be sad. Staff morale. I get such very good English wrong answers. No, staff morale will go down, demotivated. Yes, that is the right thing, but that is a business risk. For example, I fire Prakash. Automatically, other staff will feel a little scared for their job. There is no doubt about it. They may be demotivated. Yes, no doubt. But that is a business risk. It has nothing to do with the financial statements. So don't say things like, oh, staff morale is down because we have fired for some people, so they will be demotivated, so they will not work properly. Again, you are not a business consultant. The worry is that if we are firing so many people, we may need to pay them. We may need to make certain disclosures. And if we do not properly account and mention these liabilities in the financial statements, the liabilities will be overstated. Sorry, understated. Current liabilities will be understated. Very good, Manan. Right? So I have identified 3 risks so far. Again, we look at responses shortly.